As America's weak economic recovery has many in the U.S. cutting spending habits, hundreds of Asian tourists are taking in the sights of New York's Wall Street. Yet neither stocks nor bonds are the investment of choice these days amongst China's wealthy.
The quality of the debate over fiscal imbalances in the U.S. government and in the European governments has really frightened a lot of financial market participants into buying gold as a safe haven. And in China in particular, you also have rising inflation and inflation concerns, which are additionally driving some of the investment demand for gold.
Jeffrey Christian, the managing director of a commodities research company, has been studying the precious metal for more than 25 years and notes that while China is the largest gold mining producing country in the world, accumulating about 11 million ounces from gold mines alone, that is simply not enough.
In addition to the investment demand, there's a burgeoning gold jewelry demand and rising gold use in electronics and other fabricated products. So Chinese demand for gold actually is exceeding domestic supply, and as a result, China has been a large and persistent and growing net importer of gold bullion over the last few years.
As the global economic recovery continues to struggle, Chinese investors are focusing on safer assets such as gold, which is pushing prices for the precious metal to new highs. However, how is that increased demand by China affecting Wall Street here in America? Jason Toussaint of the World Gold Council monitored the commodity for nearly a decade in China.
The Western market, if you look at the press lately here, is really focused only on short-term price drivers of the gold market. And what's really underpinning this market for the past decade is aggregate demand as led by the Eastern markets again.
And Jeffrey Christian says some institutions have been noticing that, diversifying their product offerings to stay afloat under current economic conditions.
So you see a lot of banks and brokers, some of whom have never been involved in gold, or some of whom got out of the gold market in the 1980s and early 1990s, now re-entering the gold market, developing gold desks, developing gold investment products, hiring people and making them gold analysts, and trying to catch part of the wind that's in the sale of gold.
Gold prices have risen 400% in the past decade, with a record-breaking run last year, leading some analysts to expect the yellow metal to hit $1,700 an ounce by the end of the year.
The government in China is developing ways in which local investors can get more efficient access to the gold market beyond the jewelry market. And a good example of that is the development of the Shanghai Gold Exchange, which is an exceptional development for the local investment community there, because it is a very large source of liquidity, it is efficient pricing and trading of gold bullion locally in China.
The World Gold Council believes this could be the basis of future financial product development going forward, such as gold-backed ETFs, which are currently available in the West. And as Chinese investors increasingly look for more ways to preserve their wealth, gold won't be losing its shine anytime soon. Natalie Carney reporting for CCTV in New York.